Wicked. So I had a wicked weekend. Friday did my analysis, did it in a different setting. So I went literally to a complete different area in the city of London. Was in an office, just sat down somewhere, did my analysis, city view and everything. That was nice. Different space, really peaceful. Spent a couple hours just really taking my time going through that. And then Saturday came back, filtered through the pairs, and then Sunday just did my whole prep and everything. So jump through the whole thing now. So DXY, I'm still looking at the long-term short on the higher time frame. We've got the 1, 2, 3 near miss, but not so relevant. We can still come back down here. We can even make it down here. I'm not saying that it's very likely, but at the moment we are moving down aggressively. So what I'm looking for right now is a larger correction in this region here for us to push lower. If I drill down to the daily, we can see that we are reaching this zone slightly corrective, which is very good because this is giving us an indication that we could just correct down here and then pull back up and then create something larger, which I'm more in favorable for something like this, something with a bit of structure. It doesn't have to be that many, but it could just be something like this as well, where we get something like that and then we sell off, which I think on the higher time frame as well, that's more than enough and clear that we have the impulse, the correction, and then the continuation. So I'm quite happy with that. That's looking really nice. What I do like about the DXY as well is that if this does start pulling up, then we're going to see a lot of the counter instruments, so like Euro USD, GBP USD, and so forth, all of them playing in line with their structures as well. So that's really nice. Having a look at GBP Aussie, what I do like about it on the lower time frame, and I won't go any lower than the 4-hour until we are in an area where it's worth refining. We are currently seeing that we are moving in this sort of trend. What happens is we build a structure, we push out, and now we're building another structure, which is very nice. So the one thing that I do like about this is that there's multiple structures in here. It's just understanding how we're drawing these, and then kind of just going with the data there. So I wouldn't get too caught up on trying to get perfection when drawing these structures, because at the end of the day, this is an area where you want to be entering on a short, in my opinion. If we're going to be entering a short, perhaps maybe even in this region would be useful, that region, because then we have a nice risk reward from here to here. Whereas at the moment, this can just pretty much come here and then just start pulling back up. So I'll pretty much be extra patient with this at the moment. I think it's worth taking your time and just waiting for this one, because if this starts pushing down and then aggressively comes up, we're going to be in a very good place. Euro Aussie. Euro Aussie is actually GBP Aussie. Let's not miss that. So I did get a nice buy trade on this on my live account. So basically we have this, and then we had sort of this, and then I just made sure that I mitigated my risk by having it there. So when price came down here, I was able to catch an entry over here and then put in my risk. I think it was off around about 30 pips. But then again, because I'm taking less than 1% risk, during market open, I did open my risk up ever so slightly to around about 60, and then left it there and then brought it back to break even now. So it's roughly around about 30 pip stop loss, which basically protected me from here. This wasn't really the most relevant. I saw this as the double bottom here before we go. So then we basically have this. So roughly I'm running around about 4% on this now. And then I've got Euro Aussie as well. The reason why I took both is because they both shaped up really well. They both have very, very good higher time frame structures, and usually they move together. So it could have been a double loss, could have been a double win, but even so, I'm taking less than 1% risk on this. So if, for example, one didn't really continue and the other one did, then at least I've protected myself in that lie. But also in terms of management, one can be more aggressive than the other in terms of structures. So I didn't want to get into this one, then this one gets very like that, and then GBP Aussie is a little bit more flat, because things like this happen, and it's happened to me before. So I guess just call it intuition, but I thought if I was going to opt in for 2 trades, these were the 2 nicest trades, especially in these nice little areas here. So going back on the higher time frame, this is what I'm looking at now. So we've had this structure where we came down here but we couldn't commit, and now we've fallen into this expanding, which can essentially give us that push to go up even further. So I'm not expecting price in any way to go anywhere, but there's a higher probability now that if we get a solid rejection from here and then we create a correction and continuation and we keep going, then we have these price targets over here where I'll be very, very aware of them, that we could definitely be pushing up more aggressively. So at the moment, these are the sort of areas that I'm looking at on the daily. We have this section here, which is very nice. So if this moves up now aggressively, we can come up to here, and then by the time we get to here, and I believe I got a tighter stop on this one. Where is it? And there was a nice little entry in here as well, but it wasn't one I was going to entertain. Where is it? So just jump in there. I believe that was the 1, 2, 3, and then the entry was just above. It's just above here somewhere roughly, and then stop loss placement was roughly. I think it was roughly around about there. I'll just double check that after. I might actually have it on my object tree. No, I don't. But yeah, so essentially got into an entry over here, mitigated my risk by having it under the ray line. I had this final ending structure within the structure, which was this 1, 2, 3. So having that there, that kind of just gave me that extra confluence that in terms of structure, we did have an ending structure over here, and then we're ready to go. So that was one thing that I was really happy with, that we kind of came in here with that squeeze, and then we kind of just pushed away. I think the most important thing now is that we continue and we break above these points. If we break above those and we're up here trading somewhere, then we would need to really take a message from the market if we're coming down, but we will have enough time to manage that trade. So it's a phenomenally good trade in my opinion. I think in terms of the potential of where it's going, and also with the beginning of this run, it's the sort of run you'd want to be in for the beginning, because it can just become one of these strong impulses, and then after it just gets very strong, it gets very corrective. But you want to be involved in these earlier areas. So that's Euro Aussie for me at the moment. Aussie news, Aussie US dollar. This one's a wicked trade, honestly. I think in terms of the entry, I could say it was somewhat of a difficult one to trade, because the entry wasn't clear, but we can see that on the higher time frame, if we look at the daily, that in terms of this section here, we tapped into it, and then now we're getting that immediate rejection. So if we're looking at the run, we're still quite early in the run, because if we get this rejection and this does happen to reject and come all the way back down here, then there's going to be plenty of opportunity on the way down. So what I'm really looking at now is commitment. Can we break below this? Because it's too far in this early run for me to just be taking a trade anywhere up here on a phase line or anything. I think if I was going to take a phase line entry, which would be here, it'd probably be in that zone here, and I'd be looking for the entry there and mitigate my risk up here, which would have been a trade that I would probably opt in for. And then it would have been roughly around about 50 pips, and then to the low I would have had at least like maybe a 9, 10 to 1. No, not even that. So that would be a 5, and then all the way to here it'd be roughly around about 21. So still very, very good risk reward, and remember that's without the scale adding in more positions. So yeah, phase line break and then going in there. So that trend line, I'd remove it completely, and I'll just look at this now. So we have this sort of corrective squeeze tapped into that zone here, and now we've pushed here. I was looking for this sort of 1, 2, 3 over here. So something like that as an ending structure, with that as the corrective middle section. Unfortunately, we didn't get that. So what I'm looking at now is that if price can come back down to this point here and break below it, and then show me that we are going to be continuing, then I'll be looking to get short. So Aussie US dollar is a solid pair. However, I'm also aware of the possibility that this is somewhat very corrective as well, that this can just quickly pull up and then come back down and then start the aggressive move. So I'm not too convinced with the short at the moment, even though we're getting that that sort of look on the higher time frame, I still want to see more commitment. When I see that more commitment, I'll be looking to get involved. So that's basically it for me on Euro Aussie. GBP USD, I think GBP USD as well is going to be phenomenal. I think at the moment it's just giving me that extra corrective move now, so I am waiting for a little bit more. At the moment I can't really say that, you know, there's enough on this particular pair for me to take a trade. I think in terms of where this is going, it can just correct, come up and then drop. So I'll give it some more time to materialize, but once I get that commitment, I'll be looking for it, bearing in mind that we could be moving to this price target, and this can just be accumulating money right now to push up further. So that's also one thing that I'm being aware of, and it may be a no trade for this week, but there may be a position to go long as well. So we'll see. Staying very neutral with that one. Aussie CAD. I think Aussie CAD is probably the most phenomenal one out of all the instruments so far. GBP Aussie and Euro Aussie, of course, no brainer, but Aussie CAD, you know, we've tapped into that override. Look at the aggressive retrace on the daily. Very nice. We didn't get a full body, but near enough 50%, which is nice. And then now we're getting that sort of 4-hour running push. So if I look at the 1 hour, this is somewhat corrective, and it's a bit well, I wouldn't say it's annoying, but I'd say it's just frustrating that I wasn't able to get involved. And this is typical for Aussie CAD as well, you know, where we do a 1-2 and then we kind of just go middle section and sell. I've seen it quite a few times, but I think at the moment, you know, there was this possibility, and I was looking for an entry for it to come and retest that zone there. We didn't really quite get that, so you know, next time, you know, I'll be looking for the same thing, just, you know, hopefully on a different day it does come there and we get the sell. And they would have given me that head and shoulders sort of line up there as well, so that would have been quite nice. At the moment, I'm just going to wait for some sort of larger correction here. It may not come, it may just keep correcting and then I won't get an entry. I think the gameplay is kind of drilling down to the 15-minute chart, which I'm not really going to do, and then kind of just looking at these structures in here and then seeing how I could get involved in those. But to be honest, I'm not really phased about not being able to enter on this market right now. I think there's abundance of opportunity. So if this does somehow make its way back up here and then sells, probably I won't actually take that trade, just because this will be so large. I think I would have to reevaluate properly, but at the moment I think I'll wait for something like this and then I'll go short. And then if we do get something like that, that's how I'll be entering the trade in this area here. Depending on my trading plan, it'll probably be a reduced risk entry, or risk entry depending on how the structure ends, using RO3. Yeah, so in terms of price targets, I think, you know, first sort of area I'll be looking at this as an inflection area. So, you know, if we can aggressively move here, then we might get a larger correction before we go. Moving on to my wild cards, Euro USD. So Euro USD is one that I've been eyeing up quite closely. We are aggressively bullish. However, I'm looking at something somewhat like this to give me a sort of ending structure, in a sense, to go here and then to come back down. And then if we do get that, then perhaps maybe it might just be room for this to either correct here, create something like that, which I don't think is likely at this point. I think what's more likely is we come into this area here, we tap into this. If we do come down, you know, we just do something like that. And then we go, and then this just becomes one large correction, and then we can just push further. Because looking at the DXY as well, if this does pull back aggressively and creates a larger correction, then Euro USD would make sense for this correction to come down here. Because what we could then see is this, and if we do see that, then, you know, this aligned with the higher time frame gives us enough momentum to perhaps push up to these regions here. So I think it's in the best interest for people trading Euro USD at this point for the aggressive buy, but I think they need a large correction. So if the DXY starts to stall and corrects pullbacks, then we can see similar price movement with Euro USD, and then we know where to position ourselves. I think with GBP Yen, which also is a phenomenal pair, it's just a matter of timing. So right now we are so close. I know we've been waiting quite a while for this one. Essentially, I've been looking for something to just, structurally sort of jump out to me. I think at the moment it's not really giving me any sort of entry. So I just have to be extra patient with this and keep evolving the structure. I think at the moment, what we could be waiting for is just a tap out, tap in, correction, and we go. I think that could possibly be the true gameplay. However, I would only be looking for that flag then at that point, even if it's aggressive push, even if it's corrective, there isn't really enough, because then I risk the level of just, evolving here, and then price becomes something like this. So if this becomes very corrective, then I'm fully aware that we could just come in for this trade, and that will be the golden trade essentially. So could we essentially just correct up here, and then do we correct back down? If so, we could just impulse back up, tap into this sort of 1 2 3, and then we sell off. So that's kind of what I'm aware of. GBP Yen. GBP Yen is one of my favorited pairs for sure, but New Zealand Yen, similar price action, but like I said with GBP Yen last week, if you asked me about GBP Yen, it was shaping up for a nice structured approach. Now, same situation with New Zealand Yen. I'll just wait for that push up and push down on the flag. So let it do its thing, let it catch people on the wrong side, wait till it aggressively pushes back in if it does, and if it does, look for that correction and we'll go short. USD Yen, I think USD Yen is probably my most favorited pair in terms of structures. In terms of structures, this pair has been extremely wicked, honestly. Like, if you could just take a minute and appreciate how much this pair structurally just respected structure. It was only about November time where we really started to give commitment and honestly the structures in here were phenomenal. I think you have to read between the lines, but once you do read between the lines and you understand what you're looking at, it just gets that much better, honestly. And in terms of how you would have entered this, well, there was a lot of opportunity, to be honest. There was a lot. I wouldn't say that you would have always been able to capture every trade here, but for sure there was definitely room to capitalize. So if I just mark on just price points, so let's say this was a mistrade, this was a mistrade, at that point there your psyche would be like, oh, man, I've missed so much, I'm already far in the run. Well, if you zoom out a little bit, are you really far in the run? You're actually at the beginning of the run. So missing trades only makes sense early in the run, because you're not going to get them all, but you will get some. And if we just drill down to the daily, which is more than enough in my opinion, right? But I'll go to the 4 hour just so it's a little bit more clear. There's an entry here, which meets with this override. You could have taken it on that candle there, put your stop loss above it, and that would be in one trade which you'd be running. So let's say run into current price, it's around about 2%. It did run around about 4-5. Over here we have another trade. Perhaps maybe if you looked at the override, you saw the retracement, you weren't convinced, and then over here you took it over here. That's another trade. It's don't look at the stop losses because they do put you off. But even so, that was running 2.6. I could just pick up quite a few trades. We have a 1, 2, and then 3 over here. Then we had that price rejection. We had that little pullback. But once again, it's not the most convincing. But there was a trade in here. I would personally say that this was the trade. If you were to take that, probably around about here would have been best. And then you'd be running to around about another 7.34. Over there was a trade, so that would roughly be around about. This one's a little bit more tricky because with this one you have only about 1.77% on the table there. So if you were to take that trade, you have to realize that this can just pull back and come back up here. So you'd have to be on your risk management by taking that trade. So knowing that, you'd have to know that I need to be by the charts for the next couple hours. Or when price moved down aggressively, you would have to aggressively move to break even, or leave it there, but knowing that you could get tagged out. That's the risk you take at that point. And then price would have moved down here. You probably wouldn't have allowed it to move all the way up here, so you probably would have been out for 3% there. Truthfully, on this one as well, you would have probably, I think you would have got away with it. You would have probably got away with roughly around about 5 point something percent over there. This one you may still be holding it, to be honest. You may just actually move your trade to break even-ish over here. And this one also, you may have been taken out, or you may possibly be holding at 1%. And then yeah, so like I said, there's a lot of trades then, and if you look at this period from, let's say, when we were eyeing it up, when the sales just started to really get obvious, you would have looked at that roughly, yeah, about a month until you took a trade, on about 22 days till you took a trade there, and then until you took the next trade, another 15 days, and then until you took another trade, another 21 days, and then another 5 days. But then in total, you could have potentially been running roughly, let's not look at that position, but let's say about 6% plus another 3%. To be honest, that's 9% over a course of that little period on one pair. Obviously, bear in mind, you would be looking at other pairs as well, taking other trades, but that's just a lot of focus in one area. You could have made a lot of money. You could have made more money as well, but that's the way I would have seen it. So that's basically USD yen, and yeah, I think it's been a phenomenal run for USD yen, and I still think there's going to be some major big opportunities. But bear in mind, because the DXY is potentially looking like it could pull back, and USD yen and DXY are looking very similar. If this does drop and then pull back aggressively, we could see something very similar here, where this drops and pulls back aggressively. So in terms of what's currently happening in the background, I think just be aware that this corrective price can pull back here, and then we can just pull back quite aggressively and then come back down. So that's something, but I think the move coming back won't just be a spike up. I think it'll be a very corrective sort of move, but with some aggression to it. Something somewhat like, if I can pick out some price action and show you, yeah, it could just be something like this. It could just be something like that, where price probably like this. So I'd be extra aware that if price just taps into it down here, we do get that sort of corrective move. It could be like this, and then we're looking at this as an override, and then we're thinking but we really have to look at the DXY, because if DXY gets bullish, the US dollar pairs will get bullish, and the counter pairs will go bearish. So keep that in mind, and I think that's going to be solid for this week. So yeah, only 2 trades at the moment. I've got this one, which is GA, and then EA. Hopefully tomorrow we'll see it slightly higher. Thursday we'll probably see it still in its correction, then Friday we might see it continue, or maybe start pulling back. So we'll just have to bear it in mind and keep waiting, but right now it's looking solid. So yeah, thanks for watching, have a good week, and